Hey, what's up, traders? We're just going to do quick. It's 9:29 a.m. right now. We're going to do a quick run of the open and show what I'm looking at. Instead of doing morning ideas today, we're going to do that. Okay, gang. So market just opened a minute ago, and you can see that the market is already starting to move. So when we're looking at the open of the market, we're zooming in on this 15-minute here. But before we do that, just like in the morning ideas, I always like to get the overall context, because without the context, you might as well just throw out the micro movements. Since I didn't make the morning ideas because we really haven't done a whole lot since yesterday. You could see that yesterday's movement was kind of muted. We went up and down, and then we ended up selling off at the end of the day, but we didn't really go anywhere. We talked about how, we would probably, if we pulled back, we would still be in this area, and we were looking for lower prices, but not really concerned until the market got below 4,500. And even then, probably 44.14. So right now we're still in the middle of this. The big context here is we're still in the middle of, we're pushing up through the middle of this big fat area, which means that we'll likely go back and forth a bit more. The volume is pretty low today at 65%. Or 66% down here, and you can see that off of the open we're moving down. Okay, in the overnight session we kind of traded all these prices the same, and we're coming down to the bottom of where the majority of the volume was yesterday. So I'm looking at this. Do you see this hole right here in yesterday's profile? I'm looking for the market to come down into here off of the open, because there's two distinct distributions for me from yesterday. Here's one right here. I guess I can make them boxes. It's a bit easier. Here is one right here from yesterday. And then here's another one down here. Okay. Boom. Those are those two boxes from yesterday. So what do you have in the middle? That's the over-under, right? So I'm looking for the market to come down a little bit further and then bounce from there. I don't see a whole lot of downside potential. I think this is going to be more of a choppy back and forth market. So then what I'm looking for in a choppy back and forth market is I am looking to, and I'm trying to find the right little tools here. I'm looking to sell rallies, find places, not just randomly sell a rally, but find places to sell rallies and find places to buy dips. You can see that the volume is low at 70% of the normal 20-day average. So this is another indication that we'll likely just go back and forth, right? So I'm looking for, there's nothing to do here for me until the market gets down to 45.71. Now, if the market just turns around and goes straight back up, fine, let it happen. I don't care. It's going to go without me. I'm not the guy that chases the markets around. It's just if you're trading any index, or one of the four main indices, you do not want to be chasing these things around, because when it looks like it's breaking out is the time it'll turn around. So I'm sitting here doing nothing off of the open. Since we've opened, okay, we have the overnight high is up here, the overnight low is down here. We haven't really done anything. Okay, you can move down to a even more granular if you'd like. I don't typically see people doing better in shorter time frames. I see people doing better in longer time frames, meaning if whatever you're using right now, I would hesitate to say that you would do better if you moved down, and I would say that most likely you would do better if you moved up. But we're talking more about the open here instead of trading strategy or time frames or something like that. So what I personally do is I'm looking at the overall picture. Boom, we see it on the daily chart. I can look at a 4-hour. We've kind of broken out from this area here that we've been in most recently. I'll add yesterday's trading in there so that it's a more clear picture. You can still see that the majority of the volume down here, all right, near 4,500. Now, so if you're used to trading, okay, if you're used to trading and getting antsy off of the open, thinking you have to do something, this is probably a pretty good thing for you to see. You see the market dip down early. I was waiting for it to get a bit lower, near the bottom of this, of these two distributions, so I could buy somewhere deeper, because the reason for that is that if the volume is low, we might not travel that far today, right? So I don't want to just be getting in the middle of nowhere in the middle You can see right now we're basically trading right in the middle of a heavily traded area from yesterday, and we're right in the middle of a heavily traded area from, on the big picture. So what is this all leads towards chop, guys? It leads towards chop, and I don't like to be involved in chop. I want to let this thing, come to me. Okay, so if that means that I gotta. Right now, the Open Championship is going on. I like to watch golf, play golf. I'll put that on in the background, right? And I'll do something to make sure that I'm not getting involved in somewhere where I've told myself I'm not. Now, for me, this is and everybody's different. I want to say that too. For me, I have certain things that I do to keep the devil from talking me into things that I shouldn't be doing, right? And we all have our weaknesses, and you have to really accept what your weaknesses are. And for some people, it's the inability to take trades. I've never really had that problem. I don't get fear when the market's coming to me when I'm take a trade. My problem is I sometimes I'm too aggressive. So I know that's a problem of mine. So I have different things that I do to try to get rid of that. And right now, as this market is going up, some would say, damn, like I got a fear of missing out. It dipped down to me. It didn't quite come down, and I'm pissed that I didn't get in. So now I'm going to get in right here. I don't, if I feel like the urge to do that, I'll get up and walk away. Or, my son's late for school right now. I'll go take him, I'll just go drive him to school real quick because I know that the market's in the middle. It's in the middle of, yesterday's heavily traded area. This is likely to be more chop. I might have, 5 or 10 minutes. Go take him to school. Do things so that you don't do the things that make you trade poorly. Okay. And that's doing other things. So go do something else for a few minutes, based on your time frame. And I know that if I come back in 10, 15 minutes, I probably will be okay. Because remember, the market in this case, when we're looking at a back and forth kind of hypothesis, let's say that's all my morning ideas are, is a hypothesis, and I'm seeing how the market plays out. Right now, the hypothesis is playing out, but it's not really near my entry location. So what I'll do is I will go, again, take my son to school, do something, turn on the Open Championship and watch it for a few minutes. It keeps me from trying to get too aggressive because I'll sit here and then try to enter the market real quick. And I can get in and get out, and then the market will end up doing exactly what I thought, and somehow I lost money because I got in too early, I got greedy, or something like that. So when I am looking for when I'm in an environment like this, and a lot of times, guys, the market chops around and goes back and forth a lot more than it trends. Okay, so you've got to get comfortable in these kind of markets, and in these kind of markets, what you do most often is do nothing, right? And actually, in most markets, what you'll do is you're waiting for something to materialize, right? You're waiting for your idea to happen, and if it doesn't happen, you have to have the discipline to walk away from it. Okay, and most likely, there will be an opportunity. Okay, throughout the day, multiple opportunities throughout the day. For me, I don't necessarily I'm not always in front of my computer when that opportunity arises. So some days are a pass for me. I've got a lot of stuff going on in my life, which you probably do too, right? So it's important that, when you're making your ideas and you're making your trading plan and you're making your trading strategy, it's got to be conducive to your lifestyle. And I'm not going to force somebody to trade like me that maybe only has an hour or 30 minutes in front of the computer, and it has to be from 9:30 to 10:30. Then the strategy might be a little bit different than mine, which is more of like intraday swing trading, where I'm looking for a central idea to play out. It's pretty reliable that it plays out more often than not for me, the way I like to trade with a little bit bigger stops than some people like to trade, because I trade smaller size than I can. So the combination of the smaller size and the central idea allows these ideas to really like play out throughout the day. I glance at them from time to time. That's my trading strategy. I'm not telling you have to do that, but from training lots and lots of people, we've seen that, that works out more often than somebody that's sitting at the computer trying to hit the button all the time. Okay, so that's this is how I'm looking at the open, guys. I know that this probably, I don't want to make this video too long, but it just shows you a couple things that I'm looking at on a daily basis. Okay. Some people will be looking for, yesterday's market closed down here. They'll be looking for the gap fill. Okay. The gap fill meaning like where the market closed yesterday, the market likes to come back and fill those gaps. That would be down here in this distribution. Okay. So as the market comes down, if I'm going to buy, 45.70 ish, I got to know that, hey, the market likes to come back to these gap fill areas. So I might have to take 5 or 6 points of heat, and always having these things kind of baked into my plan, because I certainly don't want to take a trade from 45.70 and then get stopped out at 45.65 when I know that the gap area, the gap zone, and the gap fill yesterday's close is 1 point behind that. Like I don't want to I don't want to shoot myself in the foot. I wait all day for the setup, take the setup, and then I'm not aware of context around that setup. So again, I'm just trying to talk you through how I'm looking at these markets, and I would be looking to, trigger somewhere in this 45, 71, 72 area. And that's it sounds a lot more complicated than it is, guys. The most important thing here is being able to understand the market well enough to build a plan, and then when the market comes to you, be able to trade that plan. And it's not always buying a dip or selling a rally. It's just that that's this market environment right here, right now, July 21st at 9:41 a.m. That's the most probable scenario, in my opinion. That does not mean that it's going to work. And you have to understand that there's a distinct difference between those two. Here's the probability, what I think. Here's what I'm going to do. If it works, great. If it doesn't, I do it again tomorrow, and I do it again tomorrow. And there's going to be times, statistical insignificance, where it's going to be wrong 3 days in a row, 4 days in a row. There's going to be times when it's right 6, 7, 8 days in a row. And we neither get too high or too low, because nobody knows what the market is going to do. But if you watch it enough and understand the mechanism of how it moves and what's moving it, what's driving it, what news is out today, all of these things, you'll start to really understand. And that's where the gold is, guys. The gold is in the context. Okay. I'm not pushing my trading plan on you. I just see so many traders struggling with the same thing, and it's trading like something mechanical. Now, mechanical can work, like if you have an algorithm or something like that. But usually that land is owned by people with deep pockets and better latency and all of that stuff. So I wouldn't recommend that you start there. You could end up going there. We're doing some stuff with algorithmic trading that's been years and years and years in development, and it's still not ready. So if you think that you're just going to turn an algorithm on right now that you bought from the internet, it's probably not going to end well, right? Because those short time frames are owned by HFT firms, people with better latency, more money, and all of those things. I talked about that a lot before. So if you guys like this, we can do more of this. We can do, midday trading. I wanted to change it up from just a morning ideas. I hope you guys, liked this and understand how I'm looking at the open. And I won't keep this video going because I don't know when the market will get to, 71. It might get here right now. But we would take that trade. And if you guys want to make these videos longer, have people jump on, we can do that too. So again, I'm James from Take Profit. This is the way I trade. You don't have to trade like that, but I see lots and lots of traders doing the same things wrong. That's why I wanted to make this video. We'll talk to you guys soon. Join the trading contest. It's off to a great start. It ends on July 31st.